Well, good morning, folks. We'll do a quick microphone check, video check. Can you guys see me? Can you hear me? I'm drinking water now because, well, I already drank my 2 cups of coffee. But good morning, Blake. You guys can hear me, see me, everything's good? Awesome. I don't know what kind of delay it is. Doesn't really matter. The fact of the matter is that unfortunately today I'm a little crunched on time. We got to wrap this up in about 30 minutes to 45 minutes. Hopefully we can get through the meat and potatoes of this quickly so that I can field some questions if you guys have them. What we're going to be covering today is when not to trade. This is something that gets asked very often, but I think that it's not talked about very often, just like the psychological side of trading. And well, these are the things that I like to talk about simply because they're far more important than the technical side of trading, which is actually the easy part of trading. With that said, what I'm going to do is basically address this with the understanding that we have people who trade different strategies, most likely, not only mine, different tickers, whether it's stocks, options, futures, things of that nature, okay? Everything regarding trading revolves around very, very clear trading plans, which you should go watch last Saturday's stream. If you're not sure how to create one, I've made links to a Google Doc that allows you to use that as a template. Okay, so go watch that because everything that we're about to talk about in today's series or in today's session should be, not as extensive as this list is going to be, a part of your trade plan, right? So you need to know, and I would say it's equally as important, maybe even more important, to understand how to lose less trades. Now that seems crazy and it sounds silly and it seems obvious, but I also try very hard to teach you guys how to avoid taking trades that are more likely to lose, as much as I like to teach you how to find trades worth taking that usually produce a win. Because if you can learn how to skip the trades that are typically taking away from your winning trades, well, a lot of good positives come out of that. Number one, you make more money. Number two, you don't destroy your confidence. And number three, your win rate increases. All of these things are good. The problem is that trading is addicting. A lot of people treat it like gambling, and that's what makes it so difficult. So with that said, what I'm going to do right now is go through a quick list that I've come up with of things that you should avoid trading if you see these things. And then I'm going to cover in a little bit more detail each one of those things because I've come to find through my years of teaching that people tend to trust rules or trust trade plans or anything when there's logic placed behind the reasoning. I do believe that if you understand something at a simple level, then it becomes more comfortable for you to accept it and therefore more comfortable and easy for you to follow, okay? The plan, the rule, whatever it is that you want to call these. So with that said, when should you consider skipping or waiting on taking a trade? Point number one, during major economic announcements. This includes rate decisions, FOMC days, job reports, GDP data. And again, I know some of those things for options traders, we don't get affected by them because the reports come out an hour before the market opens, but I have a lot of futures traders in my group. So it's important that you be aware of what is going on economically or report-wise every day. I post it in our Discord community so that you guys have access to that information. But just know that big reports bring volume spikes, bring volatility spikes, and oftentimes very big moves. The problem is we don't know which way that move is going to be, okay? The second point, and this is not one that I follow, and I put an asterisk next to this, but I do know a lot of people who actually don't like to trade the first 30 minutes or the last 30 minutes of the day. Now, I personally try to take my trades the first 30 minutes of every day because, well, the best volume, volatility, and cleanest chart is going to happen at that time. I prefer that. It's not for everybody. There are people out there who don't feel comfortable trading first 30 minutes, and that's good. If that's part of your trade plan and you would have come to that conclusion because you tried to do it often enough and it's not producing the win rate or the profits that you hoped it would, and therefore it's become part of your trade plan not to trade during that time. Respect that. Don't do it because somebody else is doing it or somebody else is good at it. If you don't like taking the trade in the first 30 minutes or power hour of the day, don't do it. For me, the last half of the day is not a good time because theta is much higher and there's all kinds of other things, but we're not going to get into that. Another time to not trade, when you're emotionally compromised, okay? Whether you're angry, upset, overly excited, sad, depressed, not a good time to trade, guys. This business requires your unadulterated focus, okay? You have to treat it like a job. You've got to treat it like it's important, because if you don't, it becomes a game and it becomes easy to just not care, and you won't care until you're broke, and that's where all roads end if you don't respect your trade plan, your rules, and part of when not to trade should be a part of your rules. Another time you don't want to take trades is after you have experienced a series of losses or wins, okay? This is when we get into revenge trading or over trading, right? So we want to recover our losses quicker and we want to make more money quicker, right? Again, we're not going to expound on these things in this particular section, but that's another time. If you're not writing these down, you should be, by the way. When market conditions don't match your strategy or trade plan. Now, this seems obvious, but a lot of people don't use that as part of their trade plan, and you should. Okay. Another one, when you're tired, you're sick, or unable to focus completely on the markets. Okay. We just covered that a couple points ago. If you can't dedicate the time to the charts, then don't trade. Okay. I know a lot of you have day jobs. A lot of you try to do this on your lunch breaks, but you need to be focused on what's going on, because sidetracks and being, not focused on this can very easily become a problem. And many of you already know this, okay? Definitely don't take a trade if you don't have a clear trade plan. Now, I keep referring back to a trade plan because it's paramount, right? You need to know when and why you're doing anything that you do in this business. There's got to be purpose and reason for every decision you make. And the reason you need that is because it removes the guesswork and therefore should minimize the emotions that come along with trading. Okay. During extremely low volume periods, whether it's market holidays or off hours or, whatever the case is, and I'll show you an example of what that looks like. Just go look, Alan. Yeah, we'll do it. We'll do it in a second after this. Okay, not right now. Low volume periods are the worst for day traders. Now, I'll show you what that looks like and how you could spot it if you don't use a volume indicator, which I don't, but I'll show you here a screenshot in just a minute. But what happens during these times, again, around holidays, off hours, meaning if you're a futures trader and you're trading outside of normal trading session hours, price movement is sporadic. It seems erratic. It bounces around a lot, and it becomes a little bit of a problem. And then the last one, which is not something that a lot of people keep track of, but I started to not that long ago, and this is my favorite one of all of these, is when the chart stops reacting the way it normally does. Now, what I mean by that, again, without getting too deep in it, which we will get in deeper to it a little bit later, is if your normal trade plan or the things that you're normally looking for, whatever that is, that usually works or usually results in a specific, action. So if we cross this line of support coming off of a lower high, we expect it to go down to the next support, yada, yada, yada. Keep track of how many times those setups are not working. Okay. You might experience the fact that it's not working on a trade and lose some money. But if you go back and you're starting to see, wait a minute, these setups aren't working as often as they usually do. Guys, there's a reason for it, and that should be a justification for you to wrap it up and walk away. Okay? Now, let's go over with a little bit of explanation as to why these things are important. Again, I'm doing this not because you don't understand the list I just laid out for you. It's because that may be a clear or defined explanation as to why you shouldn't do it will help you adhere to these rules a little bit more, okay? So during major economic announcements, they're great for market volatility, which is great for day traders. Unfortunately, we'll never know which way that volatility is going to push the market, right? So we call the 10 o'clock candle the gamble candle. And the reason is because almost always there is a huge pop in volume, and it really doesn't matter which way the market is trending or what it's doing oftentimes when 10 o'clock hits. Okay, so what I've come to find is that a lot of people will stay in a 10 o'clock trade if they're currently down on the position, hoping that the 10 o'clock candle fixes that problem. But then there's other people who won't hold on to a 10 o'clock trade or a position through 10 o'clock because they're already up and they know that that candle can ruin that. You don't know. We don't know what the market's going to do based on information because we don't have access to that information, right? We don't get to move the market. So we can't say, hey, I have the power to move SPY. So just let you guys know, I'm gonna buy a huge position at 10 o'clock and it's gonna make it go up. I wish we knew that information. We don't. Okay. The time surrounding releases like FOMC, payrolls, CPI, GDP create wider spreads and unpredictable price action. Right. These movements can trigger stop losses or worse, actually fill you at horrible fill prices. So if you try and put a limit order in, okay, at a specific dollar amount, and you get a big volatile candle, it will skip over your limit order. And very oftentimes, especially if you're marketing too, you either miss the fill, miss the stop, or you use market orders and you get filled at horrible prices, guys. It's not good to trade around these types of events, okay? I would say that if you do this on a regular basis, you're more gambling than you are trading. And gambling is fun, but very often not profitable. How do I know? Just ask the casinos how they make so much money. Market open and close periods. Again, my favorite time to trade is in the first 30 minutes of every trading day. So as long as there's volume and space between support resistance levels to make money, that's my time to shine, right? Now, what is a low volume pre-market look like? Now, for SPY, you have to understand that SPY is typically the most highly traded ticker on the stock market. And when you have a pre-market that has got very small candles, I call them pancake candles, or gappy space between the candles, or no clear trend of any kind, guys, this is a danger sign. Now, if you haven't read my book or haven't looked at it, go ahead and pick this up right here, because we explain what to look for to consider taking your trade and how to spot low volume. Okay, it's on Amazon. Go check it out. Not a sales pitch, but in this case, if you're in another way to determine whether it's a low volume time, at least in pre-market, this can change at any time, guys, is if you are having a hard time drawing support resistance levels. If you're having a hard time finding a good support or resistance level, understand that it's because there's no defined areas that you feel confident the price is going to stop at or not. Okay, that's a sign. It's easy to ignore these things, but I would say it's critical that you don't. Now, for those of you guys who are in my trade community, you have seen me many times skip an opening trade, which you also know is my favorite time to trade. And it's usually produced me staying away from a chart that would have gotten me in trouble otherwise. We call it a couch in the kitchen chart. So basically means when you see a chart that doesn't seem to make sense to you or it seems off, and you will know when it's off because you get used to looking at ones that are normal. And then when you see one that's not, just use that as a precursor that things are a little off. Just be a little bit more patient on that day, okay? When you're emotionally compromised, again, trading while you're emotionally compromised, as we'll call it, it's the most dangerous scenario for us day traders, in my opinion. When you're emotionally charged, whether it's excitement or frustration from wins and losses throughout the day, it will impair your decision-making abilities. You know this. You've done it. If you've been trading for any length of time whatsoever, you have fallen victim to your emotions probably more times than you care to count. When that becomes a problem, and I am one that will tell you, I have yet to find a single person that has learned how to trade emotionless. I don't even think it's possible. Okay? I really don't. And I've been doing this for a long time, and I trade just about every single day. And I trade with people every single day. And I have yet to find a single person that has been able to successfully trade emotionless. I wish we could, but unfortunately, we can't because money is too valuable to us in this world. Okay, especially here in the States. We are a debt-driven society. We love to spend money, and we need it to have comfortable lives. It is what it is. And you know, people who say you don't need money to be happy either have a lot of it or they don't have any of it. And well, as you know, life could be sucky without it, and it's not everything, but it is what it is, right? But what happens when we start to trade while we are emotionally unbalanced? Well, we increase our position sizes, right? I know there's a group of you guys out there who have scaled too quick, too fast, or too big, too fast, right? That usually becomes you have a string of wins or a string of losses, and you want to fix the losses or you want to add to the wins. Suddenly, we just scale up because we want things to be fixed quicker, faster, and it just doesn't work in this business, all right? You create a different problem when you do that. We tend to ignore our stop losses, right? How many of you have been in a losing trade? Emotions take over and you just say, well, I'm already down 50%. Who cares? I'll just hold and hope that it gets better. And if it doesn't, I'll just take a complete loss, right? And again, remember what we're talking about here. You're still trying to trade while you're emotionally charged, okay, or emotionally compromised. Not a good thing at all. We've all done it, myself included. It's very easy to let these things get to us. You got to recognize when it's happening so you can protect yourself from yourself. Don't try and pretend like emotions are not playing a role in everything you do in this business. They are. Accept that. It doesn't make you a weak trader. It doesn't make you a weak person. This is normal. But what is not normal, unfortunately, is most people fail to acknowledge that it's affecting them. They want to ignore it, just like everything else in life, guys. You can ignore having a pile of debt until you're blue in the face, but at some point it catches up to you. It's no different when you're talking about emotions in this business. Don't run from them. Don't try and pretend like they don't exist, because if you do, they'll pop up out of nowhere like an evil surprise, and they'll take all of your money. If you know where that quote comes from, you know. Shout out to NF. We will get into trades if we're emotionally compromised that don't meet our criteria for taking a trade, right? If you've taken a couple of losses for the day or a couple of wins for the day, suddenly you're invincible or you're panicking and you start taking trades for no real reason other than, hey, I'm an emotional ball of wreck and I need to fix this now, okay? You will become a hold and hoper more often than not if you're trading emotionally. And lastly, you'll cut your winners too early. How many times have you had a rough day or you took a trade that you know you probably shouldn't have because it didn't meet your trade criteria. And as a result, when the trade does start to work for you, you feel like you broke rules, you got in, now you're getting lucky, and you take the profits too early. This is a common problem for traders all the time. One of the things I get asked all the time is, Jimmy, how do I hold on to my winning trades longer? Well, there's a lot of reasons as to how to do that, and most of you guys don't want to hear it, and I have told a lot of you guys what you need to do. Number one, it's usually revolving around your position size. Nobody wants to scale back because you can't make quick money that way, but that is how you will become more comfortable holding your winning trades longer. I promise you. But in the end, what we can call this, for lack of a better term, is emotional hijacking. Okay, you basically have fallen victim to emotional hijacking, which basically means your emotions override your rationale, leading to impulsive decisions that contradict your trade plan. That's basically what we just covered. Okay, another time that you should definitely consider not trading, and I have a personal rule for this of my own, is after consecutive losses or gains, I would say, but more importantly, the losses. I have a rule for myself because I know what happens to myself when I break this rule. If I take 2 red trades in a row, I usually allot myself up to 3 trades per day. But if I take 2 of those trades and they're red, I don't give myself the third opportunity. And the reason for that is because I started to keep track of why and what I would do because of my third trade. If my first 2 trades are red, I know for a fact, 100% fact, and I don't hide it, I don't deny it, I know it exists, and because I know it exists, it became the reason that I created this rule for myself. I will take the third trade, not because the setup is perfect, not because I need to make the extra money. It's because I don't want to accept a red day. And the third trade will be taken for that reason first. Not only, I might still take a trade that meets my criteria, but I'm taking it not because I want to, but because I feel the need that I don't want to be red. That's a problem. That's a problem because what happens when you get into that trade, you know you got into it because you're trying to fix the result of the first 2 red trades. Well, what do you think is going to happen while you're in it? You're going to stay in it until that red disappears to break even or green. The downside is if it never gets there, you will be willing to hold that to 0. I can almost guarantee it. I know for me, that is exactly what happens. I will stay in that trade until I am break even or green on the day. And if I don't get there, almost every time, that becomes a hold and hope trade that I'm willing to let go to 0, only making the problem worse. Guys, the same thing happens when you're having a good green day. How many of you have gotten into consecutive trades that ended up making you good money? You may have hit your daily goal, but at the end of the day, you say, hey, I'm going to take another trade because I just can't lose and I can afford to lose even if I do. Because I've made so much money today that even if I take one more, I'll still be profitable. I've done it. I know many people out there have done it. So after the consecutive losses or consecutive wins, you absolutely should consider walking away. Close down your trading platform, walk away, because more often than not, the problem doesn't get better, it gets worse. Okay, so we've all had losing streaks on a day. And again, guys, I'm reading from notes that I've made for myself. Okay, so if it looks like or sounds like I'm reading from something, it is. I do try and prepare for these so we can get through them quickly. I don't deviate too far from the tracks and we can get through this, because your attention span is that of a goldfish, not yours, but the people who watch my videos. So we've all had winning streaks and losing streaks on a day and fallen victim to revenge trading because of the losing, right? This is basically a protection mechanism that triggers and is why we want to quickly recover from losses and those losing trades by taking larger and very often unplanned positions. This usually compounds losses rather than renewing or making them better. The psychological need to get even with the market usually leads to ignoring risk management and trade plans at the worst time. One way to combat this would be to walk away for the day, or at the very least to implement a mandatory cooling off period after hitting a daily loss limit to prevent from snowballing into a catastrophic event. Now, this one, if I traded more often than I do, meaning I try and limit my trades to 1 per day. Lisa, I know you're out there. One of the things that you guys should try and doing, and I'll liken this to another thing that we do in our lives that we should do that we don't. But after every trade, walking away for a few minutes. Let your emotions subside a bit so that you are less emotionally charged when going into the next trade of the day, should you continue to trade, right? The whole goal here, guys, is to minimize the emotions that come into trading. Now, what's interesting about this phenomenon is there's actually ways to lose weight, right? Have any of you ever heard of, while you're eating, put your fork or your spoon down between every bite? So basically, you put your fork down, you chew, you swallow, you pick up your fork or your spoon, you take your next bite, put the fork down, chew, swallow. Well, what's happening there is you're giving your body time to register the fact that the food is getting in your stomach, and before you know it, you'll be eating less because your body is telling you it's full, it's good, stop. Okay? It's the same thing with trading. Have a cool off period. While you're cooling off, you may find, you know what, that was very stressful. I don't like the way I felt during that trade. I was fortunate to get out green. I'm going to leave that as good enough, right? Whereas if you try and make a decision immediately after a good or a bad trade, you are being driven partially by your emotions. Don't do that. Do not trade under those situations. The next one, when market conditions don't match your strategy. As I told you guys before, I try and stack everything as far as probabilities go in my favor. That is what I need to see for me to take my trade. Each trading strategy works optimally under specific market conditions. Range-based strategies fail during breakouts, while trend-following approaches underperform in choppy sideways markets. You guys know what this is, okay? Again, I hate to refer back to a trade plan, but there is a reason that a trade plan should exist, because it's defining what is more likely to work and result in winning trades and what should you be waiting for to take those trades so that you don't end up taking losing trades. We're all going to take losing trades, but there is definitely a way to minimize the number of losing trades we take per day. If the market is not giving you what you want, based off of your trade plan, don't do anything. We talk about this every morning when we do our call put scenario, guys. You know this. What do I tell you? I tell you every time, if you don't feel comfortable trading the way that I do, or what I'm trying to see in order to take my trade, then please don't do it. Don't do it. It's not worth it. The market will provide you many opportunities per day to take a trade that does match your criteria. The whole reason for the plan is because that is what you need to see to be comfortable. You don't ever want to take a trade that is uncomfortable, ever, because you will destroy it. You will not treat it the right way. You won't manage it properly, and it's just a quick way to end up blowing up your trading account. Again, I am talking to a group of traders. I'm assuming all of you guys are traders. Many of you are in my community. If you're not, jump in. This is the kind of stuff we talk about, guys. This is the kind of stuff we do. I'm trying to teach you how to protect yourselves from the danger parts of trading that nobody talks about. Okay, but these are the most important things to look out for. Okay, so when the market conditions don't match your plan, do nothing. And if you have a hard time watching a chart and doing nothing, then shut down the charts. Shut down your Discord or whatever you watch or listen to, so you're not tempted to take a trade at a time you know you shouldn't. And you know when you shouldn't. Okay, there's no, you just ignore when you know you shouldn't because, well, emotions, right? The next one. When you're physically or mentally compromised. We kind of talked about this in the last few points, but if you're sick, if you're not able to be focused on the charts, if you're under the influence of medication, if you're tired, if you're whatever the case, you're at work and people are buzzing your phone or calling you or needing you for meetings or asking you questions. Not a good time to trade, okay? While we're trading, we have to be able to make important decisions and take decisive action without fear and hesitation. And the only way to do this, or attempt to do it, is with full focus on the market and what's happening within them, okay? Guys, if you can dedicate chart time to this, right? Meaning you're focused solely on this, you stand a much better chance of finding good trades. And if you don't find a trade worth taking within that specific amount of time, do nothing. I know many of you guys out there have taken trades on your lunch breaks, even though there was nothing to trade because, well, this is my only opportunity to take a trade, so I better use it. No, don't. Don't better use it. It's better to do nothing and gain or lose nothing than it is to force something and gain or lose something. Okay? One side of that equation is gonna set your confidence back a little bit, and that's far more expensive than the money you would have lost at the end of the day. And nothing worse than feeling like you got lucky on a trade either, because then you'll never know what really worked. Was it because you followed a strategy, or was it because you got lucky? Again, comes down to a confidence problem then. Being sick, sleep deprivation, medication effects, or mental fatigue will degrade your ability to do this, no doubt. Research shows that decision-making quality declines progressively with fatigue, leading to mistakes like misreading charts, entering incorrect order sizes, as we like to call fat fingering, or failing to notice important market signals. Okay? So again, focus is key. If you can't dedicate the focus to the charts, then focus on the fact that you're going to lose money. And that hopefully becomes the reason you don't do anything when you can't pay attention. All right. Don't trade if you don't have a clear trade plan. Again, I'm going to refer you back to last Saturday's conversation. We talked all about trade plans, what goes in them. And I did make a Google Doc for you to use as a template to create your own trade plan. Go check it out. A trade plan should always have a reason for entry, exit, position size, risk management, and all of these things, right? If you don't have those things at the ready before you even consider taking a trade, don't do it. Guys, you should know in advance, and this is why I love the call put scenario. It's not because it works 94% of the time. It's because I'm defining the criteria for what I want to see to take a trade, what I'm going to do if it doesn't work, where I expect it to go if it does, and therefore I'm removing any hesitation. I'm removing any questions as to what am I going to do if it doesn't work out. Okay? If you don't have a clear trade plan, do not trade. That should be one of the top priorities for you to do and work on before you even put any money into your trading account to begin with. Have a reason for everything you do, a good reason, not because I felt like it. No. You have to be able to go back and you have to be able to say, I entered this trade because this happened, and this happened. It's either going to work or it's not. But if you waited for those criteria, you could start keeping good records of saying, hey, I followed this plan every time and it produced an 82% win rate. If that needs tweaking, well, you can go back and tweak the plan and then measure the results. See if the tweak was good or if it was bad for your trade plan. Okay. The next one, low volume periods. We talked about it in the beginning. I showed you a picture of what low volume looks like in SPY in the morning in pre-market. The problem with low volume is you're going to have bigger spreads. Interestingly enough, smaller orders will move the market more dramatically. I'm sure if you guys have watched some late night trading, futures trading or whatever, you will see that the volume is very low, but some of those candles are really big. It doesn't take much to move the market when there's no participants in it. Okay, that is why I don't like futures personally. I would trade futures during normal market hours. I would have a very hard time doing it outside of market hours. I tried it and it's so slow, so painful. You fall asleep, you get bored, you forget a trade's open, and then next thing you know, you wake up and you're down a lot of money. Don't want to fall victim to that, right? Also, indicators, which I'm not a huge fan of personally, become less reliable, right? Indicators are only moving because the chart's moving, and the chart's going to be moving when there's people in the market participating. Indicators become not very useful when there's no volume. Liquidity can disappear instantly. Basically, you can get stuck holding a trade or get stuck in a trade that's just not moving. That's uncomfortable, especially if you're trading options, and theta becomes a problem, right? Price becomes erratic and often lacks follow through. Again, this goes back to the next point that we're going to talk about. If you are finding that what normally works is no longer working on the day, consider walking away. Don't trade the chart. Don't trade the markets. Okay? The final point. When the chart stops doing what it usually does. Now, this is one of my favorite ones. Start keeping track. So for me, if we're putting in higher lows and we break resistance, I expect it to go to the next resistance. If it's not getting there more often than it is, then I have to accept that there's either a low volume, a lack of follow through, whatever the problem is, it's going to result in something that is not working for me. So why continue to trade in an environment that is more often not working for me than it is? Walk away. The stock market will be there tomorrow when you wake up, and the next day, and the next day. The market will be there way before us and way after us, okay? Please, don't force anything, guys. It's not worth it. There's plenty of opportunities every single day. There's plenty of time to take these trades, but what you don't have an infinite amount of, aside from time, is money. Forcing trades because you feel like there's not going to be another opportunity, when you think about it, is silly. Okay? We've all missed great trade opportunities. We've all stayed out of great winning days. Was it the end of the world? No. Did your account suffer dramatically? No, it didn't. In fact, it didn't suffer at all. The only thing it didn't do was benefit from that day. There's nothing wrong with that. There's something way more wrong with trading at a time that's not likely to benefit your account, and you force trades and lose money. You don't want to do that. Okay? So in closing, as far as when not to trade goes, no matter what you're doing, guys, this business requires a ton of discipline and a ton of patience. There's a bunch of things that you should be aware of. One of them, and the most important one in my opinion, is the fact that many of us have not put in the effort to figure out what is causing us to struggle in this business, what we're doing that we haven't identified yet or haven't accepted yet, whether it's a personal weakness or a strategy, a flaw in our strategy. You've got to be able to look at yourself in the mirror and say, yeah, I have to acknowledge the fact that when I am red on the day, I will trade myself into oblivion trying to become green. You have to acknowledge that that's a problem for you. Because if you don't, you'll never stop doing it. And then the result ends up you overtrading your account to zero. Be honest with yourself. It's the best thing you can do for yourself. And you will not be able to argue with the black and white results of your journaling if you're keeping a good journal. Your journal will tell you more about yourself that you don't want to know, but you need to know, than anything else will. It'll tell you if trading later in the day is a negative thing for you. It'll tell you if you realize that on Fridays, your win rate is 2%. Like, I know people that started to keep track on a daily basis of what their percentage wins for the day are, and they come to find that Fridays are just horrible for them for whatever reason. And so the simple resolve is, I'm just not going to trade on Fridays. You have to know you, and you have to be able to accept that you're not perfect, because nobody is. Nobody is. But define your rules and your trade plans around your weaknesses. Do everything you can to avoid the weakness. It doesn't mean it has to be fixed. Sometimes the easiest fix, the easiest resolve will fix the hardest problems. Right? For me, the one that opened my eyes was looking at the fact that my win rate drops below 50% after 12 o'clock. And initially, what I wanted to do was say, hey, how can I make money after 12 o'clock? It didn't even cross my mind at first to just stop trading after 12 o'clock. It immediately went into, how do I make it possible for me to continue to trade and stare at a chart all day long? Well, the problem instantly got fixed when I decided, you know what? Don't be an idiot, Jimmy. Just stop trading after 12 o'clock. Simple. My workday got shorter. The money I was making got bigger. My confidence got better. There was no downside to doing less of what was causing me to go the wrong way. So again, guys, my favorite point for this is, if your trade plan stops working when it normally does work, recognize that it's not and do nothing about it. Walk away. Stop trading for the day, for the week, whatever it is, and walk away. And most importantly, acknowledge your own personal weaknesses. If you know that you get emotional after your first trade, I would argue that the first trade of the day is the one that's going to be the least amount of emotion involved in it. And the results of that trade will absolutely play a role in what happens in your second, third, fourth, and fifth trade of the day. You all know exactly what I'm talking about because you've all done it. Even if it was the first trade was green, it's never green enough. Or you're so close to a whole number, or you're so close to meeting a daily goal. And how many times has that next trade resulted in negative progress, backwards progress? Don't ignore how often that happens. Don't ignore it. We're swimming in a pool of sharks. The more times you jump into that pool, the more likely you are to get bit. If you're able to get in, swim around for a second, get a fish, catch a minnow, make your money, and get out unscathed, recognize that hopefully you did that with skill, but don't overstay your welcome, okay? Please get disciplined, remain patient. The market will give you many opportunities to make money, and you will have a trade plan in place to know when to take those opportunities, but you should also now know when not to take those opportunities. With that said, I got about 10 minutes at best to answer any questions. Does anybody have any questions at this point? I love that you guys joined me today. I hope that this was useful information, but more importantly, if you have any questions, I just have I have a couple of minutes before I have to actually get on the road. If not, we can wrap it up, and I can tell you, as I always do, thank you for your support, especially my left coasters. This is very early for you. You make me feel like I do this for a reason. This is all of you, and I truly appreciate the support, guys. As I've said in every other one of these, Alan, several people have posted it in here. But just go into our Discord, Alan. I've posted it several times there. Go to my YouTube page and look at the community posts. I posted the link there. But DM me in Discord if you can't find it in those two places, and I'll share it with you. The fact of the matter is, guys, I'm terrified to do these live sessions out of fear that nobody's going to show up. You guys always come in droves, and I love it, and I really, really appreciate it. Even if these aren't helpful for you or you don't need this information, it's still, I try to be your support factor, and I'm very thankful that you are mine in times like this. So with that said, you guys enjoy the rest of your weekend. Thank you for everything. Thank you for your support. And if you need anything, you know how to get a hold of me. And till the next one, I love you guys.